some chalk talk. Okay, how it's going to work is I'm going to break down some of our favorite patterns to trade on the whiteboard behind me. Listen, I know it's not a chalkboard, but chalk talk just sounds so good to roll with it. So bear with me. All right, so we're going to break down some of our favorite patterns to trade on the whiteboard. We're going to go into every little detail from volume, moving averages, support, resistance, where we want to trigger, our stops, everything. Okay? I want to preface this video though by saying we are only looking for stocks to buy within major uptrends. That means if you zoom out on a chart and you look at the long-term movement of the stock's going to be in the top right corner. Okay? We don't want these bottom right corner charts. Okay? The reason being is that we know that there's demand for the top right corner charts. We're all about the momentum. And momentum is just caused by extreme demand. That's it. Okay? So let's get into the first pattern. Let's do it. Alright, first setup. Trendline support buy. These are very low risk setups with very high probability. These are the ways we get into the strongest stocks with very low risk entries. High probability trades on low risk entries, that's all we're looking for out here. Okay? So what we want to see is a strong stock create very well-defined support. That support may come in the form of horizontal support or within an ascending trend line. I'll show you. So we have a stock. I'm going to draw a stock moving higher. So as we can see, we have some ascending trend line support. So we're going to keep an eye on the stock until it creates a converging trend line descending. So we're going to keep an eye and then, oh look, it finally got so tight. Now exactly what we're looking for is this converging trend line to make for a very tight risk entry, and this is going to be our buy point. Now what we want to see here is we want to see all the moving averages, well let's say the 8 and 21 or the 50-day simple moving average. We want to see them get clustered in this area. When moving averages are clustered together, it indicates that there will be an expansion soon. So we're staring at this area and we see this support. And now a descending trend line has formed, creating this tight risk entry. So what we're looking for is we want to buy on the way up on the break of that descending trend line. We want to see the volume increased by the end of the day. We really want to see the volume increased above the level, but what's important is that it is higher than its, let's say, 20-day average volume by the end of the day. That's very important, volume in this equation. So we want to see the converging trend lines, the very well-defined support. Ideally, there's the tight moving averages, and very importantly, we're buying on the way up. We're not buying on the way down. So how you want to do it is you buy through this trend line and you place your stop below support. Your stop has to be below the support because that's how you know you're wrong. It can come down, it can chop around, it can retest the trend line, but until it breaks this support to the downside, you're not wrong yet. Okay? So those are the key things we're looking for. Let's look at some charts where we crushed trades very recently using the setup. Let's get into it. Alright, trendline support buys. Now, as I said before, this is how you want to get into the strongest names out. You want to keep an eye on them. And you want to stalk them. You want to really know all their levels, their resistance, their channels, what trend they have, everything. Because you want to get in these on a tight risk entry, and that's how we do it with these. So let's look at this. So AAOI, this stock has been in some, this has been a very hot stock, this AAOI. As you can see, the crazy run it's been on, but we just bought this thing, and we used this trade exactly. And I'm going to map out the important parts. All right, so we see it's in this channel, and now so we're watching around here, and it's just battling with this support right here. And now we see that, zoom in a bit, it's battling with this support trend line. And there's no accident that these lines are holding up. These trend lines are very important. So if you see this is the type of entry we're looking for, where, all right, it's making a bottom,
it's not closing on a red day. It's clearly showing strength at the trend line, and now we see a converging descending trend line. So this trade's trigger becomes 63, 63-ish, and I was calling this out to the chat when we bought it. Boom, look at the follow through. Boom. So we bought 63, and there was so much volume that I just kept the low day stop for about $1 risk. It was 62.12. I bought 63. I had to stop. And this one, that was the entry. That was the entry. So we got in this one with $1 risk, and it's still going. I ended up getting out here at 84. I'm a mook at the time. What's 20% in 6 days? I got out here 84.36. It's okay, but what I'm trying to say is you got to find these low risk entries into these strong stocks, and then that's how you get the crazy risk reward. I think I got 20 to 1 on that one or something like that. All right, next one, TRVG, same story. So now we're seeing some horizontal trendline support, and this one is a great example of the moving averages being clustered. So we see the 8 and 21 day getting very tight, and look at that. It creates a descending trend line from highs, a nice little inside day. How we traded this was I actually bought a feeler here around 18 when it broke this inside day high right here, and I had to stop below the support. And then what I did was add very heavily through the high of this inside day, 19 bucks, boom. And that's the trade right there, 19 bucks. I had $1 risk, and there you go, right to 24. You could still be in this one if you're trading on the 8 day, but I'm just trying to show that it's a very tight risk entry. You gotta be staring at support, and the support has to fully bottom, and then you want to see high volume expansion. And when you see the moving averages, the momentum moving averages, like the 8 and 21 SMA clustered up, that's great news. That is great news. And let's check out this EDU. So this one was a nice one. This stock has been in a major uptrend. And it's like, how do you get involved? How do you get involved without just blindly buying highs? So you stalk it, you keep an eye on it, and then look, boom, creates the horizontal trend line support. And then look at this, our favorite, a converging trend line. And this is our entry. And look at that, the 8, the 21, and the 50 simple moving average all clustered up very tightly. This is exactly what we're looking for an entry. So the high of this day is 72.68. This is 70. The high of this day is 73. So the trigger's about 73. You buy 73, very tight risk entry, and quick 10 bucks there. The trade's still in motion. So this is another one. Just very easy, very low risk, high probability trade. And these stocks have to be strong stocks. It's very important. Now here's one we're currently in. Whoa. We recently bought this Swear, same thing. See this little circled area? Outline it for you. That's where we got involved. We bought 28.25 on 75 cents risk. And where the arrow is, we actually took 50% off the table. I'm still in this one. It's just I feel like it's back testing support, whatever. Story for a different day. But as you can see, we're staring at this support trend line, and then here's the initial entry right here. Boom. Very steep converging trend line, and then that's what led to the first entry. 75 cents risk off lows, and then boom. And then this is the day, and then above between 31.50, we were selling a lot of stock. I still have half my position left, but that's exactly what we're looking for in these support buys. All right, and that's what we're going to continue to look for, because they are tight risk entries, and they give explosive moves. All right, so now you know what to look for.
All right, next setup, earnings basis. Now to me, this is the easiest setup in the history of trading that no one even realizes. People don't even look to these trades because they think stocks are overbought or the RSI is too high, when really there's just too much demand. If the stock's going up, I'm going to buy it. So let's talk about this trade. When a stock has great earnings, you're going to see it gap up. Trading down here, whatever, wherever it's trading, boom, gaps up. So what we want to see in this gap up, we're not going to buy this day one at all. The stock gaps up, whatever it does. This new support, the low of that day, becomes huge support. If that support holds, it's very bullish. Okay? So we want to see the stock chop around, not too much. We want to see that new support hold. And in the following days, very low volume, not much going on. And then, through the first day's high, the earnings day, we want to see a huge volume breakout. We're looking to buy this breakout with the stop either low of day or support. It depends on the setup there. But we want to see the stock break resistance on high volume, and we want to see some follow through, because the more volume and the more follow through we see, that just means the more traders and hedge funds and big guys and whoever are taking the same trade that we're taking. I want to see the demand of the stock just increasing. Okay? So let's look at some charts, the ones we crushed last quarter.
All right, earnings bases. So let me start off the video by saying that we're going to be looking at only daily charts. Every candle represents one day. And the moving averages I'm using are the 8 and the 21 simple moving average. I use them for short-term trades and momentum trades, so that's why we're going to be looking at that for the earnings bases. So first one up, ANET. Let's see how this one sets up. Boom, great earnings. That's what we want to see. But we're not going to be buying this first day. We're going to wait till the setup emerges. Let's see what happens. Next day, nice little day. Okay, all right, it's trying to find its support, resistance. It just made a huge gap up. Okay, so now we've got something forming here. Looks like a little descending trend line. Let's make that a little more visible. A little descending trend line's forming. Okay, tries there again, but sets up here. Now this is when we're really interested in the stock, because the 8 simple moving average is caught up, and now it has a pretty tight consolidation. We can also make this case right here. Look at that very tight wedge in this very strong stock on great earnings. That's a ton of layers of probability right there. So we're going to get in when it breaks it higher, and boom, so we're in. So we bought. I think I bought 121.50 on the actual trade, but right around any in this area, you could have gotten in this day, you could have gotten in this day. But what's important is that you bought in, let's say, 121, 122 range. Probably use a stop under 120. All right, so this one, look at how it runs after. It's a very tight setup, and it just continued to run. Now, if you're trailing on the 8 simple moving average, you're still in. Let's say your price is 122, giving it $2. You're already up $11. That's 5 to 1 right there. And boom, let's say you got stopped out there. If you trailed it on 21 day, it's still going. And then this one actually ran all the way until, look at this, until the next earnings. And surprise, surprise, I had a nice earnings reaction. But so look at this. We got in this trade because of earnings, and it ran for the next 2 months. And it was such a simple, tight risk trade, and it just gave such an easy swing trade higher. Very easy pattern to spot. Something very easy to look for. Next one up, Apple. Oh boy, oh boy. So let's see. Apple, it's finally back in the game. Boom, gaps up. Decent earnings. All right, nice little surprise there. How's it set up? Look at this. It gets very tight. Gives us 2 very tight inside days. Now, normally the pattern triggers over the highs, but when it gives us some other sort of setup, like buying through 2 inside days are just consolidation, buyers meeting sellers. So we can expect that when they break one way, you can expect a big move, because it shows that either buyers or sellers won. In this case, in a strong stock like Apple that's gapped up on good earnings, I mean, I happen to be biased to long side, and boom. So look at that. We bought 129.50, and we're playing off this day. So after we saw some follow through, 129.50 is our price, and our stop is the low of this day, which is 128.90. 60 cents of risk. Okay, let's see how it plays out. And it just grinds higher. Explosive move. We're already at 140. Remember, 129.50, 60 cents of risk. You're $10 in the money. Over 16 to 1 risk reward. And let's say you're trailing on 8 day, boom, you got stopped out there, 140 or so. If you're trailing on 21 day, you're still in it. But regardless, simple trade, and it just kept running and running and running. And then boom, there's your stop out again. It's just an easy trade. So next one up, Square. Let's see it. So this was an interesting one. This was 2 quarters ago. So what happens here? It gives us a nice little move, nice little inside day. Could have tricked you, stopped you out here. But it actually gave us a nice little interesting inverse head and shoulders pattern. I'll take that as the first shoulder. There's the head right there. And now here's the last shoulder. You see it getting very tight, as well as creating this descending trend line from highs, and we love buying through descending trend lines at highs. So here's how it sets up. Boom, triggers you in. And this one ran, and now actually this one had funny. So it ran right before. Earnings. Then the next earnings. Look at this. Does the same exact thing. It gave a couple fake out moves, but once it finally got going on the earnings base, look at this. Held this low. Very important to hold earnings day low. Held that low, and boom, huge run emerges. Huge run, and that's your stop out. But look at this. You pay attention to these stocks. You're buying 20.50 right here. Let's say you have your stop the low of day, 50 cents risk, and you're making $5. Look at that. It's 10 to 1 risk reward. That's money right there. That's all we're looking for. Next one up, PayPal. Okay. Oh, ruined it. Gave it up. So let's see. Here you go. This is their earnings, the gap to all-time highs. So let's look. This stock, look. Oh, it's so overbought. Who would want to buy this thing, right? Because it's up so much. No way. Give me a setup. Give me a reason. Look at that. 2 inside days, and boom, you're buying 48 here. You have your stop low today because you saw volume and follow through. You're getting 60 cents of risk. All right, so 5 to 1 is $3. Let's say at 51 is your price target. Just flagging. There's your 51. Oh, just missed out on the 5 to 1 there. But if you're trailing on the 21 day, there's your 5 to 1. So it depends on your trail for this one. And then 52, this one kept running. Wow, this one kept running and running and running. And then still in it. Oh. As you can see, this tight little entry right here yielded the beginning of this huge move. And it was 2 inside days after good earnings. Now, a lot of people would look at this chart and say it's so overbought. What are the RSI levels? Whatever they're going to say. And they're going to miss out on this trade. And it was a really easy trade. Now this one, iRobot right here. So let's see. Strong stock, boom, good earnings. All right? Look at this thing. This thing's at all-time highs. It's just gone parabolic. Who could buy this thing after this? So what's it do? Sets up. Look how tight it gets. Look at this. This little tiny wedge right here. You buy through these highs with this tight inside day. ANET, this name 2 days prior moved $8 intraday, and now it moved $1 this day. That is extreme tightness. So you buy through that high, $80 resistance. You have a stop at the low of this inside day for $1, and boom, there's your entry. So your price is $80. Let's see how this one runs, and this one just takes off. And look at the tight risk entry. And depending on how you're trailing it, it runs. And you're going to get out definitely on that bar. But, so what I'm trying to get at is these tight risk entries, they are so easy to spot. Don't be on the team that's saying they're overbought or something, but you just have to realize the demand in these stocks is just so extreme and so high, and it's very important that it holds these days lows. And now what it could do is it can shake out the lows. It could take out this low and rip right back, and it's still very healthy to me. You can take it out. It's just got to come back. All right, so that's what we're really looking for in these earnings bases.
All right. All right, next setup we're going to talk about are super bases. I call them super bases because these patterns have developed over 6, 8, 10 months, maybe a year, maybe over, whatever it may be. We talk about bases a lot that happen over 3 weeks or whatever. These are super bases. These stocks pretty much get forgotten about for whatever time period they go into this consolidation period. But when they break out of this consolidation period, it is like a mad rush higher. And these give the absolute best breakouts. We talk about it all the time. The longer the consolidation, the bigger the breakout you can expect. And these trades are just the epitome of it. All right, so let's look at how we trade these things. We want to see a stock pretty much get forgotten about. Chomp around for months. But what we want to see is a very well-defined resistance, very well-defined support. Now, pretty simply, we're going to be buying through the high of this, but what is of the utmost importance is constantly having alerts set near this resistance level. Because this is a stock that is not going to be on traders' radars, not going to be talking about it, but they end up getting the best breakouts. So you have to have your alerts set near the resistance level. I like to do as many alerts as possible, $1 below, then 75 cents and 50 cents, because I do not want to miss this trade. These are the best breakouts. So very simply, we're buying them like we do other breakouts. We're waiting for this resistance level, and once it breaks this resistance level, we're buying through it. Now, we need to see massive volume, the biggest volume out, all right? The other patterns, like big volume is very important. This one, you need to see massive volume, because this stock has been hiding so long, you have to know that something has changed. You have to see huge volume breaking the resistance level, and you have to see huge volume above the level. That is very important. It's most important to see the volume above the resistance level. That's called follow through. That's what we're looking for, right? Let's look at how we traded a few of these over the past year. Let's do it.
All right, let's talk about super bases. So these charts, they're not going to be the top right momentum charts. These aren't going to be the hot names or the one that every trader is talking about. These stocks have gone into hiding a bit. So what becomes very important in this trade setup is the 200-day simple moving average. That's the one highlighted right here. Now, the ones I'm looking at in this are the 21-day, the 50-day, the 100-day, and here's the 200-day. But it's very much dominant upon the 200 simple moving average, because that's the one hedge funds and all the big players look at as either something's in an uptrend or downtrend. They just look to the 200-day simple moving average. So that becomes very important in this trade. So let's look at it. So here's Chipotle Cmg. Now this was a storied stock. You know, it was always on the news when it was in the 700s. Had the valuation of trillion, billion, jillion dollars or whatever it was, trading at 10,000 PE. I don't know, whatever it was. But so you see, and then it has its fall from graces, goes into a hardcore downtrend with the E. coli and has all the news. But then after it goes, so now no one's talking about it at this point. It's a dead stock. So, and then you see it begins to, now it's starting to work on a base. We can see this 440 level becomes a nice little support, a nice little resistance level. And so now I've decided that once that breaks and it's above the 200-day simple moving average, that will trigger the trade. So it creates this hardcore 440 level, and then boom, finally triggers the trade here. In these trades, you always have to have alerts out, because you're not going to be staring at these names every single day because they're so dead. It's dead money right here. But when they make the move finally, when they get out of the base, it's, as I said before, a mad rush higher. So this one triggers, and this one was tough because, you know, the daily entry might have been, let's say, right here to get in, but you could still buy this 440 because it's such a big level at the end of the day. So then it gives you a run, and it gives you a run quickly to 500. Very quick, $60 if you got in around here. If you're staring at it on the daily chart, you get in at 410. You get in 440 to 500, $60 very quickly. Creates this high and tight bull flag for continuation. And these trades aren't everyday trades. You're not going to see these. These are the ones you wait around on. Let's see, next up, let's go to this Win. Win was also, when I started my career, it was one of the hottest names, then went into hiding, hardcore. Like this 2013, 2014, like this run, oh my goodness, doubled really quick in about 6 months, not so bad. So afterwards, it goes into hiding for a bit, and it's not as sought after, but look at this. Now it's above its major moving averages, and it's starting to create this resistance level. I like the dash lines better. All right, cool. Now we're talking. So now it creates this resistance level at about 105 to 107-ish. Now you can look at this. This is a little fake out move. That's the absolute high of it. So we're looking at this 105 level, and All right, here we go, getting closer, and boom, it finally breaks out. And it's funny because it actually broke out. We were looking at it right here. It broke out on a rumor that it was going to get bought out by something like Intel or something, which is just impossible and illogical, whatever the case. But regardless, you see this 105 level, tight consolidation right underneath the level, and then a high volume break of the level, and boom, 107. Let's say you're using this day as low. 104 is your stop, $3, and you're making $13 to 120. And if you stick with it, it's really going. But as you can see, and now this thing it's been in a mad rush higher. As soon as it breaks out of the base, the complete characteristics of the stock change, and you can see that the volume is heavily increased over here because now it's all on traders' eyes because of the feisty move that it gave. All right, next up, Generon. So this was my absolute favorite trading name, 2013, 2014, 2015, because I mean it's when it was all the biotechs were going nuts. So if you look at the run, Jesus, 150 to 600, 2 years, whatever. So what it does is it goes into hiding, and it creates this 440 level. Get that. Creates this 440 level right here, and it gives a couple fake out moves. But when it finally wants to go, it has a nice high and tight bull flag, and we were staring at this one a little more closely because of the huge base. And if you were able to buy this around 400, that was the absolute trigger of the trade. But you were still able to buy this 440 because there's a high and tight bull flag under the huge macro level, and then boom, gave you 100 points. Gave you 100 points in 3 weeks, 4 weeks. And so these are the absolute craziest breakouts always because they've been just consolidating for so long. So then someone, whoever the big guys are just soaking up stock, and they're eventually going to rip it higher, but they just sit here through this channel soaking up stock. And then we only want to be in for the run. We don't want to be in for all this madness. So then it creates this high and tight bull flag right here and gives the entry. And then boom, the rest is history. And now the most recent one, IBB. I mean, as we were talking again, these biotechs, and I'm actually still long this name coming into this video. And so these biotechs, again, as we saw in Regeneron, insane run from about 2012 to 2016 or whatever, 2015. You know, when they finally wake up and the market gets hip to them, they really start to go. So then IBB starts creating this base, and now we're forever waiting on this 300 level. It creates this nice little resistance level. So then when it finally triggers the trade, boom, look at that. And I personally murdered this one. My price was $297.50. I saw a volume here. But so it gave a nice, pretty tight bull flag. I mean, relatively tight, 10-point bull flag. I mean, this name chops around $50 so easily. So then, boom, initial reaction is straight up for a few days. Now it got me on the trailing stop out here, and I was able to re-enter, and I'm still long the stock. I re-entered on this day. And look at us. Clear skies ahead. 325, the strongest name in the market right now. I'm going to hold on to the stock as long as I can because it's just going to keep on running. The moral of these trades, the moral of the story here, is that the longer the consolidation, the bigger the breakout, and the faster it's going to break out. So these are can't-miss trades at the end of the day. Super bases. So you want to have these names on your radar every single week. You're checking on these charts, throw an alert out because it'll trigger here and it'll fail. But when you finally catch it, it is a huge gainer. I made like 20 to 1 risk reward in this, and I'm still counting it. So these are the super bases. These are definitely some of the best patterns to trade in the market, and you got to keep your eyes open for these trades. And that's the gist of it, really. All right.